Good morning, everybody. It's Chris from Serene Education with the 4 majors notes update for the 22nd of February 2013. Okay, I'm just going to go over the 4 majors as per usual. I'm just going to start by looking at my euro against US dollar here. Let's see how it's been doing this week and what we can expect. Well, weekly, let's bring up that weekly chart, and you can quite clearly see that price has pretty much, if you look at it overall, has pulled back and is now trading below the institution moving average and trading into potentially the 50% retracement area here, and in doing so into prior consolidation support and resistance at roughly the 13,200 mark. That you can quite clearly see is happening now on the daily time frame. Okay, you can quite clearly see that wicks on the weekly is what we're seeing now happening into this consolidation area here, and that area that we picked up is 13,200, clearly a consolidation area here previously and going into the future, and you can quite clearly see that price is going to consolidate now. A lot of bearishness over the past couple of days after price actually broke below the support area here at 13,300. Price consolidated here on a number of occasions. However, the highs never actually really moved any further, and in doing so forming lower swings, which indicates that price is still negative intermediate. And sure enough, we had this bearish engulfing candle which cancelled out all this 4 days of indecisiveness at or support at this 13,300 mark, and in doing so price rallied to the downside, heading towards these areas here. In doing so, where to for this? Well, ultimately we should be seeing price, if remaining under 13,300, to be heading towards the next level, which should be roughly around the 1305 mark. Getting below that, then we should be heading towards that 12,900, which happens to be where the institution is. You can see a lot of consolidation at this area, so it'll definitely start to consolidate if we ever get to this line. But getting below the institution, then next to 12,700, which happened to be a price support and resistance going quite a way back, and then 12,400 before we head to the all-time low that we saw in June, July of last year. So as it stands at the moment now, you can quite clearly see on the daily we have our red arrow and red candles. However, you can see that the sentiment out there is still looking blue. So got to wait. If you are trading the daily, you got to wait for that the ribbon on the other side to actually confer that and to go red. However, intraday, a lot of opportunities, a lot of negativity here. You can quite clearly see that bearish engulfing, trading below the 13,300, nice entry level, pull back, and then the actual dropped to where we are trading now at 13,200. As I mentioned, that will be a consolidation. You can see the wicks on here, a lot of indecisive wicks, a lot of trading momentum, however not very decisive, and we're looking for decisions. We're looking for decisive moves on the market, and those candles here on our 4 clearly don't tell us where my price is sitting at the moment. However, because you can see that the ribbon is primarily red and we are trading below all the moving averages, including that most important one, the institution, we should be looking for price to continue to the downside. So look for shorting opportunities, clear 13,200, then look short. However, we do get a bullish engulfing candle here at 13,200, then we should be looking back towards that 13,300 near term as a potential trading opportunity. Next up, sterling. Let's have a look at the weekly. This pair has seen a large drop since January. Huge resistance level here at 16,200-ish. And price since then has subsequently fallen quite sharply below all the moving averages and below the first target here, support at 15,700. Failed to actually hold on to that, and subsequently the prior week really falling. And you can see this week very, very, very negative indeed, and headed towards a major support and resistance level in the shape of the 15,300. We are now seeing price pulling back. Remember that this price over here has stalled at this level back since September of 2010. Okay, we've had little wicks through here. So what we should be looking for is price is for people to take their profits when they hit 13,300. Now to look for the close of this week to see if it still remains above, because as you can quite clearly see, a lot of wick to the downside. But that means over the past couple of days, price has actually pulled back. And if I bring to the daily, you can quite clearly see on Wednesday we had this bearish engulfing candle breaking below 15,300. We had a further shorting opportunity intraday on Thursday, yesterday. However, by the end of close of play yesterday, you can see more action at the upper end of the candle and now trading into that 15,300. If price fails here, guys, near term, and we get a bearish engulfing candle, then we should be looking for further sentiment to fall, and we can continue on our way to the downside. And in doing so, looking to target the all-time lows. If you look at roughly, we've got one over here at 14. We've got a slight hesitation at the 1450, sorry, 14. What are we looking at there? 1448.50. a bigger one at 14,500, another further one at 1442. So there's definitely clear air to those areas below. So we'll look for a bearish engulfing candle on your 4-hour. You can see up here, looking at my 4-hour chart, you can see the hesitation, tweezer bottom, and price is now pulled back towards 15,300. It's failed over the last 4 hours to move above that. We get a bearish engulfing candle here, a nice close below, say 15.25. Then we could target near term to 15.15, and then all those points to the downside. So be patient, wait for the bearish engulfing candle. However, if we do get a bullish engulfing candle above 15,300, near term we should be looking to profit upside, but you're going to have to do that really aggressively because the sentiment has been very, very negative on this pair over for the short term. Next up is US dollar Swiss franc. Let's have a look at this pair on the weekly. Not really moving anywhere fast. You can quite clearly see the sentiment is still negative, failing to actually break above the institution moving average in August of last year, and subsequently since then just falling short and moving lower. Very, very small trading range for this particular pair, very indecisive, but nonetheless still moving in one direction, and that seems to be lower. Near term, trading below 94, which happened to be a prior consolidation support and resistance line. Taking the low here in August of last year to the current high in July, you can quite clearly see the 23.6, the 38, etc. And you can see where price is trading in relation to all of that. 94, as long as price remains below 94, then we should be looking for negativity. Near term, you can see prices actually being quite bullish over the past 3 weeks. And if you look on the daily, you can quite clearly see that momentum really driving higher. As long as you could actually trade this intraday very well. However, you'll be doing it against market sentiment. But nonetheless, there are opportunities like this to actually trade against market sentiment. As long as price is below the institution and below this 9400 mark over here, we should be looking to take targets at this level. If you want to see positiveness in the market, then we definitely need to see that 945 mark being breached. And if we do get to that, then we'll probably see the price moving up towards the 1000 that we saw price attempting way back in July, August of last year. So as it stands at the moment now, sentiment moving to the upside intraday. So opportunities to capitalize on that. You can quite clearly see that I took the all-time high that we saw just recently in January to the current low at the start of February. You can see the 23.6, 38, the 50, 61, the 78.6. You can see people have actually been using this as prices moved higher, trading above the institution on this time frame and heading into that 78.6. Prices failed to actually give us breaking above it, but failing to actually find support on that and to push higher towards 100%. It's actually fallen away now. So near term, we could see price actually consolidating. So if you wanted to, you could take the intermediate here to the low of the start of this upside, moving to the current high. You could see the 23.6, 38. Not too far off. It could stay above these levels, and we should see price reattempting 933 intraday. If not, we should see price pulling back. And if it pulls back, it'll probably end up heading towards a prior major resistance level intraday here at 925. So wait for the bearish engulfing candle and look to trade to those downsides on these particular time frames. Last pair of the day is US dollar Japanese yen. Very, very strong sentiment since the early parts of October of last year. Price really building on that and pushing higher. I've taken a monthly chart here. You can quite clearly see the all-time high that we had in 2007 for this particular pair. Price has fallen quite drastically over the number of years, and in doing so, the US dollar has not done really well. Subsequently, near term, you can see through late 2011 going into 2012, we did start to see sentiment picking up, and we saw more price action moving higher. We did bottom out here just above the 7600 mark, and price headed and spent more time below the 80 for a long period of time. However, near term, end of last year, we saw a lot of sentiment coming into the market for this particular pair, and the US dollar rallied against the Japanese yen. Daily, you can see that I've taken those pivot points that we saw on the monthly and projected them on my weekly and daily. You can quite clearly see the 23.6 is at the 8700 mark, and the 38.2 February tracement is 94. You can see what's happening near term now with price as she heads into the psychological resistance layer. Clearly finding a lot of resistance over here near term. Price actually falling away from 94 just recently over the past 4 days, and finding support at near term support at 9300. You need to get below 9300 and below the institution, the 20-period moving average, in order to see price continuing to fall to the downside. The longer she happens to hang around the top here, the more likely she's going to end up reattempting these 9400 marks. The longer she fails to actually break above 9400, the more likely long term she's also just going to get fed up and she's going to fall over. So we want to see one or two things happening: bullish engulfing break above 9450, or a bearish engulfing break below 9300, and especially below this consolidation area here. Get that, and then we can see exactly where we need to be. Ultimately, long-term price is looking very positive. All the moving averages below price in order, and most importantly, our ribbon is still telling us to look for buying sentiment. However, the longer we find resistance here, the more likely this price is going to fall. We haven't seen that fall quite yet, so it wants to reattempt the 9400. So if you want to see a break of tradition, the tradition at the moment now is to keep trying 94 and to make a nice support at 93. To get a break of this 93, a nice bearish engulfing candle, that would indicate that we should be looking further to the downside, targeting the 50-period moving average, which is roughly around the 950 mark. Get below that, and then you're heading towards the 8700 mark for the near future. That's it, guys. Looking at news, not much out today. We got some European economic forecast news, German info business climate news coming out of 9 AM GMT this morning. However, this afternoon, not much on the US markets. A lot on the Canadian section, though. Core CPI month-to-month figures, core retail figures can be quite interesting to see. They're expecting a positive figure for those, and if it does come out like that, then we should see some positiveness for the Canadian leading against its cross pairs. So, bit of news out this afternoon for the Canadian dollar. Other than that, not much else. So, have yourselves a fantastic weekend with family and friends, and I'll see you first thing on Monday morning. Until then, trade serenely.